But the big question is, what happens next if another financial institution runs into trouble?
So the US money supply is now shrinking for the first time since the Great Depression all the way back in the 1930s, and the internet is buzzing all about it. And while all of that is happening, another major bank is on the brink of collapse: First Republic Bank.
California-based First Republic Bank was given a $30 billion lifeline from 11 other banks.
11 of America's largest financial institutions agreed to pump $30 billion into First Republic.
The bank also reports depositors pulled out more than $100 billion out of the bank, believing that First Republic could be the third bank to collapse after Silicon Valley Bank and Signature Bank in New York.
Here's some context, by the way. When Silicon Valley Bank
Andre here has made a fantastic video outlining a lot of things. You're going to want to see this. I thought I wanted to make a reaction video with this because I am an investor. I do have some experience with this stuff, and I thought I could add in some points as we watch this together. Hit that subscribe button. Let's get back to it.
By the way, when Silicon Valley Bank failed, it was the 16th biggest bank and the second biggest to ever fail, right behind Washington Mutual, which had $188 billion in deposits. Now, First Republic was the 14th biggest bank in the US with over $200 billion worth of deposits at the end of 2022. And once people saw the collapse of Silicon Valley Bank, a lot of them got scared and decided to pull their money out, and that's why over $100 billion worth of deposits left First Republic. And because of that, 11 of the biggest US banks decided to step in and give $30 billion to First Republic to try to stabilize them. And now First Republic's stock price is collapsing.
The stock slumped 50% yesterday after it reported a dramatic $100 billion worth of withdrawals in the last quarter.
The stock has now lost over 50% this week alone, and on Wednesday, the stock was...
At the time of me recording this, First Republic has went down, and it looks like PacWest may go down too. But the different things he puts in this video kind of forecasts and shows what's going on and why this banking crisis is probably not over. As a matter of fact, it may kind of just be getting started.
Because of how volatile it was. But the craziest part about all this is that someone actually predicted this could happen. Jim Cramer, who said that First Republic was a good bank. So if you saw that tweet, you probably knew to short the stock because usually the opposite happens.
It's so true.
Lost over 90% of its value since that tweet. But don't worry if you missed out on making dollars, because we might not need those soon. Apparently the yuan has overtaken the US dollar to become the most used currency in its cross-border transactions for the first time in history. And now Jim Cramer is telling us that there's no systemic risk in the banking system.
However, there's one big difference between now and 2008. This time there is no systemic contagion. Now, I know that seems hard to believe, but there isn't.
Oh, Jim, you're so cute.
Moment for First Republic, once a bank beloved by the rich and famous, but it's an all-clear event for everyone else.
So translation, we're all doomed. Jokes aside, in today's video, I want to help explain exactly what's going on in the banking space. I want to make sense of all the madness between the US dollar and the yuan. I want to give you a quick update on some crypto stuff, and then I want to share with you how I'm personally investing. So with that said, let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for another episode of how I'm going to creatively tie this video back into low-cost broad market index fund investing. So here's a quick recap of why all of this is happening, starting with the banks. Let's say a hypothetical bank gets $2 billion in customer deposits. It might invest half of that into treasury bonds to earn some interest, and the other half it'll give out as a loan. Now, when interest rates go up, like they are right now, those bonds become worth less because new bonds are paying a higher interest rate and more people want them. That's why the value of the older bonds the banks bought go down. And when a bank has less on paper in deposits than it should, if enough people ask for their money back, they become insolvent and they need a bailout. But right now the government is telling everyone that they don't want to bail out First Republic, and that's why their stock price is crashing. But while all of this is happening, people...
Since then, JP Morgan has acquired First Republic, all of its good cherry-picked assets, and acquired none of its liabilities. So JP Morgan, the banks, it doesn't surprise me that they are probably trying to actively do things to make these banks fail, because they get to swoop up all the gold and leave behind all the garbage.
People are talking about something else. the US money supply, which is going down, and here's what that means. When it comes to stocks, investors always look forward to the earnings season. Now, if you're not sure what earnings season is, it is easily one of the busiest times for those who watch the markets. And that's because that's when a company tells their shareholders exactly what's happening right now and where they think they're going in the future. It's extremely valuable, but there's a problem. Sometimes earnings calls can last for hours, and you can miss them if you don't know when they happen or if you just don't have the time to sit through them. And that's why I'm so excited about Moomoo. Moomoo is a one-stop trading platform for you. You might have seen this really...
We're skipping Moomoo.
Scary chart, which shows what's called the M2 supply of money, which is shrinking for the first time in almost 100 years. Now, the last time that's happened was during the 1929 Great Depression and the times before then, during the Panic of 1893 and the banking crisis of the 1870s, and it all sounds terrifying. But before you panic and pull all your money out, there's actually a really simple explanation for this because it's happened in the past.
In 1971, the quantity of money started to grow more rapidly. As always happens, inflation wasn't affected for a time. But by late 1972, it started to respond. In early 73, the government reacted. It started to cut monetary growth, but inflation continued to soar for a time. The delayed reaction made 1973 a very tough year of recession. Inflation tumbled only when the government demonstrated its determination to keep monetary growth in check. It took 5 years to squeeze inflation out of the system.
That was Milton Friedman, who's one of the world's most respected economists, explaining inflation and monetary policy in Japan. But this happens during every recession when a government usually floods the economy with money like we did with the pandemic. We got inflation, and now we're draining the economy of money, we're taking the liquidity out, and now we're seeing the effects of disinflation. And that's why we're seeing this scary chart of the money supply going down. But the real chart we should be looking at is actually this one. The red line shows the rate of creating money is now negative because we're draining it out of the system. But the blue line shows we're still way above where we should be on the average trend line. So all in all, there's...
I like seeing those two pieces of data put together. The fact that one probably leads the other, guess which one leads the other? The supply growth, that leads. You can see the blue one going down. See, right here is the supply growth. Here is the actual amount of money. It has been dropping the supply growth, and now this is coming down. Let me ask you something. Look at this chart, this line down here. Do you ever see it dip down? Since the 70s, do you see it really dip down at all? Look at that hook. Our economy runs on credit and debt. If there's not an available amount of credit and debt, we go into a recession. Very important to remember.
Line shows we're still way above where we should be on the average trend line. So all in all, there's still a ton of money in the system and we still have high inflation, and the Fed is trying to take the liquidity out. And when there's less liquidity, the traditional rule is that asset values grow a lot slower, which makes sense. It's kind of like watering a plant. When you have less water, the plant will grow a little slower. In this case, water is money and the plant is all of the stuff we invest in. Makes sense. Now, we could get another Great Depression, but as far as that chart is concerned, it's not predicting a Great Depression, so don't let it scare you. And also, don't let anyone scare you with the yuan and the dollar, because...
I agree. It doesn't necessarily mean, oh, depression coming, but it means that harder financial, credit, and debt times are upon us and look like they're going to continue to become more difficult. And using those points of when these things have happened, it gives us reason to be cautious. Is that fair? Hit the subscribe button if you haven't.
Here's what's happening. You might have seen this story about the yuan taking over the dollar for China's cross-border payments, and that even countries like Argentina are forging partnerships to pay with yuan instead of dollars. You might have also seen this statistic that the yuan was used in 48.4% of all the cross-border transactions, while the dollar's share declined to 46.7%. Now, when the average person hears that, assuming they don't watch my YouTube videos every single week, that sounds terrifying. People would assume the worst, but that's not exactly true. Yes, it's true, the yuan is growing in popularity, and China is making partnerships with other countries, and the BRICS nations do pose a threat to the US dollar's dominance in the future. And it's also true that the Chinese yuan is the #1 currency for cross-border payments for China. But the real truth is that the Chinese yuan still represents a small percent of the world's total use of it. According to SWIFT data, in March this year, the yuan accounted for only 4.5% of all the global commerce, in comparison to 83.71% for the US dollar. So for now, the US dollar is still by far and away the dominant world reserve currency, but yes, it's slowly shifting and it's definitely something to pay attention to. Another thing to pay attention to, though,
So are we going to lose federal or world reserve currency status? Not right now. But what it's showing is that there seems to be some dilution in the concentration of it, right? Because they're trying to decentralize, diversify payments, so it does take a percentage. Say, I don't know, $100 trillion are transacted in US dollars a year. Well, if they start doing this, it might go down to $90 trillion of US dollars being transacted a year, that type of thing. And this takes time. These types of things take time. It doesn't just happen overnight. So we can relax, but it is something to definitely pay attention to.
and crypto.
Crypto markets suffer from a lack of regulatory compliance. It's not a lack of regulatory clarity. If you make securities available to...
That man is a liar. He is lying. He is lying. He is lying. He won't work with crypto at all. He is full of shit with what he is saying right now.
American investors, you must comply with American laws.
The main problem is that the SEC and the DOJ is making it very hard for those exchanges, and a good example is Binance, which was blocked from buying Voyager. This was supposed to happen, but after months and months of legal battles in court, it looks like Binance is backing out of buying Voyager, citing that the US government is just too hostile, which is really unfortunate because a lot of us had our crypto in Voyager, including myself, and we were really looking forward to getting some of our money back. But now it looks like we're just going to be left wondering exactly what happens next. Expectations.
Thanks, Gary. Thanks. You did that. Millions of people about to get their money back and you just go in and block it. I do not like Gary Gensler. I do not.
Say that anywhere between 40 to 65% of our value could be recovered, but that's only if the US government allows it. And for now, they're just draining customer funds with their legal battles. That's really unfortunate because all it's doing is it's punishing US customers and it's pushing innovation overseas, and that's really bad for everyone because that means less protections in case of bankruptcies in the future. So that's the crypto space, and here's how I'm personally investing. Now here's exactly why I don't listen to stock recommendations, I don't look at price charts, I don't read stock ratings or analyst ratings, because no matter how qualified or certified a person is, no one knows where a stock is gonna go. And if someone gets it right, it's because statistically someone has to. But notice how it's never the same person more than once. And here's another reminder of how this happens every single day.
Scott, I'm not trying to be a hero here at all, okay? What I do, and you know this, is I analyze companies, I look at their financial statements. And I'm going to tell you right now that First Republic, as a representative of the regional banks, but also the regional bank that has the crosshairs on it right now, is a good bank. This is not a bank in trouble. This is a bank that is now meaningfully undervalued, and I think representative of the regional bank index in general. Last thing on this, I've never actually owned a regional bank. This is my first foray.
I remember watching that episode and thinking, you've never owned one. There's clearly something going on. What is this guy talking about? He's just YOLOing in?
In March, when professional analysts came on CNBC to talk about how First Republic was fundamentally undervalued. And you know what? It might have been. But no one knows where the future of a stock is going based on looking at data from the past. That's why I personally continue to dollar cost average and reinvest into ETFs.
So that's really the end of that video. There was a lot of good data in there, a lot of things to pay attention to. Now this video is 9 days old from the time I'm recording this. First Republic's already fallen out of bed. But he just laid out some points there that are the things to pay attention to, not just then, but right now and going forward. We will most likely, in my opinion, based on data, going to see more bank failures, and this is going to be a crisis. Remember what they were talking about here. The number 2, 3, and 4 biggest bank failures of all time have happened this year, and 4 and 5 are about to happen. 4 has already happened, First Republic. 5 could very well be happening very, very soon. So is this over? The financial system is sound. It's sound. Nothing to worry about here. What do you think? I think you're pretty smart. Hit that subscribe button. Thanks for watching. You are awesome.